Hello and welcome back to Explain the Charts. Today's video is an in-depth look at the SPY, the S&P 500 Index Fund, analyzing both the current news and the charts to offer unbiased predictions and insights for short and long-term trading strategies. Recent news highlights record highs for the S&P 500 and Nasdaq, driven by a surge in the tech sector. This bullish sentiment is reflected in the overall positive movement observed in the daily SPY chart, although we can see that there are some signs of consolidation and potential short-term resistance. Let's zoom into the last month of the SPY daily chart. We are observing increased volatility as the price approaches 475. This range could be considered a potential short-term resistance level. While the overall trend remains bullish, we can see periods of price corrections which are common in a bull market. Now, let's switch to the hourly chart to examine the price action in more detail. The hourly chart shows more frequent fluctuations, revealing smaller, short-term trends which can help us to fine-tune our entries and exits. We're looking for confirmations on the hourly chart to further strengthen our conviction of our signals. We notice some consolidation areas on the hourly chart and can use some of these areas as potential support and resistance levels to help determine entry and exit points when we're looking to enter and exit our trades. The overall trend is still up, but short-term corrections will happen as the price climbs. For an even more granular perspective, let's shift to the 15-minute chart. This will allow us to identify shorter-term opportunities which are higher risk, higher reward. Short-term trading requires greater alertness and attention to detail and to the news that could impact the price in the short term. The 15-minute chart can show us high-frequency price movement, and it's useful for swing traders looking to identify quick gains, which we will discuss in more detail later in the video. In summary, the SPY shows a predominantly bullish trend in the long term. However, short-term corrections and consolidations are likely, especially near significant resistance levels. Key price levels to watch for include 475 on the daily chart and some of the short-term support and resistance areas we have pointed out on the hourly chart. The likelihood of the price reaching 475 is relatively high if the overall bullish sentiment persists. However, significant negative news or unexpected economic events could cause a short-term reversal. Things to look for include volume increases at support and resistance areas and changes in the direction of the moving averages on all timeframes, as well as changes in the overall market sentiment. Remember, this analysis is for educational purposes only and does not constitute financial advice. Always conduct thorough research and consider your own risk tolerance before making any trading decisions. Thank you for watching Explain the Charts.